This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. We've seen a lot of pressure across the board. Corn, soybeans, wheat, all trading softer. Let's start looking at the corn market. Corn really broke down below our first support pocket, 366 to 369. This is now going to be resistance as we look to round up the week. Just above that, we have the 50-day moving average at 372. If the bulls cannot chew through this pocket, the bears remain in firm control and really wouldn't be surprised to see a test down towards the July 12th lows of 350 and a quarter. Now, looking at some of the fundamental aspects, obviously we have crop tours going on throughout the Midwest that are confirming what we saw from the August 10th USDA report, and that is that we have a big crop. Now, weather obviously playing a diminishing factor going forward, but still relatively important. One thing to note, we do have September option expiration tomorrow, Friday. A lot of times these strike prices with a lot of open interest tend to be a magnet. The magnet we're looking at for September is 350. So that's going to be something to keep an eye on. Wouldn't be surprised to see the market finish the week right around there for those September futures. Now, moving over to the soybeans, same type of thing. Option expiration, I think, is playing a little bit of a role into things. 850 is the magnet we're looking at for September futures. But with those options going off the board, a lot of the attention is going to continue to be on new crop November contract. And we've had a big technical breakdown this week. The inability to sustain momentum out above $9 encouraged sellers to step back into the market, to break below 881 to 884, open the door to accelerated selling pressure. And now kind of lingering around waiting for new fundamental news to come out and maybe give this market some sort of support as China and the U.S. continue talks. But I'm not sure that they're going to come to any agreement. So the bears remain in full control here, both fundamentally and technically. 850 to 851 is a must-hold area for the bulls. A break and close below here opens up the floodgates towards the July 16th lows of about 826. Now, wrapping things up with the wheat market, we've obviously been much more bearish on over the past couple weeks, and it's starting to kind of pan out the way we had expected. Now, 538 to 540 is a big kind of pivot pocket that we're looking at that represents the 50 and 100-day moving average, as well as the 50% retracement from last December lows to the most recent highs. If we break and close below here, expect long liquidation from the funds to take us back below 520, and with time, potentially below that $5 handle. So that's what we're looking at to wrap up the week. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.